And welcome back, everyone, to the National Veteran Small Business Coalition's Charlie Mike Training Series. I'm Zach Armstrong, Deputy Executive Director with the NVSBC, and I will be your host today. Before I introduce our speaker, I wanted to share a few announcements and updates with everyone. So it is our distinct privilege to have two contributing sponsors to the Charlie Mike Training Series. In more ways than one, BAE Systems and Bank of America support the NVSBC and the training that we provide when we bring subject matter experts in to really help the GovCon ecosystem. But thank you again to BAE Systems and Bank of America for their contribution and support to the GovCon ecosystem and NVSBC. So for those of you who are finding NVSBC for the first time through this training, or those who are still learning about NVSBC, just a little bit about what we do. We develop the knowledge base for GovCons. We connect veteran entrepreneurs, and we promote policies and acquisitions. And we do all this through our 15 programs and services. So when you think of NVSBC, we want you to think of training, networking, and advocacy for the full GovCon ecosystem, and that's service disabled and veteran-owned small businesses, large primes, federal agencies, and all the service providers that support veteran-owned small businesses. With that, a couple of events that we have coming up. We have our charity golf tournament. The NVSBC Education's hosting for the third time, Monday, August 24th. Sponsors are joining. So, it's an opportunity to grab that elusive foursome, get on the course, meet a bunch of GovCons, and have a good time while supporting a good cause. So registration should open up early in July, but sponsors are grabbing some of those foursomes now. So if you want to get in on the action, highly recommend you do so before July. Our annual awards gala coming up November 8th. We just released this information, so mark your calendars, join us. This is the event where we recognize and honor federal agencies and large GovCon prime contractors. And this is where they consistently achieve and exceed their SBA small business set-aside contracting goals. And we'll be recognizing through 5 different awards. This event went gangbusters last year. We had almost 300 people. We moved to a great venue at Falls Church Marriott. So highly encourage you to consider coming to this event, and more information to come. VETS 24 conference. We already have our dates. So May 21st through 24th in 2024. We just came back in end of May from a 3-day conference where we brought the GovCon community together. It was our largest event ever for NVSBC. We had 1,100 attendees, 68 sponsors, 109 exhibitors, and just over 100 speakers. So, come join us. Be on the lookout for registration. Sponsorships are available now for the event coming in 2024. Networking dinners. This is actually where the speaker, who I'll introduce in a minute, he and I met for the first time. But we have 5 different networking dinners across the country, like our main hub being the Washington, D.C., where we have monthly dinners, 60 minutes of networking, all great speakers. But we also have networking events in Norfolk, Virginia, Huntsville, Alabama, Tampa, Florida, and San Diego, California. We continue to offer more of these as our members and folks that serve the federal government as GovCons are interested. So join us. In-person trainings, Fed Academies. These are 60 minutes with Q&A. We have we average over 100 attendees at these. These are in person in Arlington, Virginia, just before our DC dinners. We have great speakers, but a lot of goodness there. So we highly encourage you to come to those Fed Academies. And Charlie Mike, why we're here today. So just a little bit, we host all of these trainings for free on our YouTube channel, thanks to our sponsors. And we have several GovCon focus areas. So learn more about Charlie Mike training, get involved. You're here today watching on YouTube, so all different types of trainings to support your business growth. And lastly, before we get going with the speaker, the NVSBC This Charlie Mike training series is part of a suite of programs that are powered by the Community Navigator Pilot Program and the Small Business Administration. So if you're looking for resources, business planning counseling, financial literacy and loan assistance, government contracting, networking, etc., please contact the NVSBC and we'll provide counseling assistance or refer you out to trusted agents and resources, again, to support your business growth. So again, my name is Zach Armstrong, here to be the moderator today. And at the end of this session, we had plenty of people register to receive this training first. And I'll be asking some of those questions that you all were so gracious to register and share ahead of time. Vic and I were just speaking before about some of those questions, so he's prepared. I'm ready to ask them. Thank you all for registering. And with that, we'll get things started. I want to introduce my friend Vic. So VSingh is the founder and managing partner at VSingh CPA. This all started, I think, Vic, you were attending our conference at VETS 22, and you were meeting a few of our colleagues. I know my friend Alicia and colleague came back to say, oh, you got to meet this Vic guy. Like, I think he's really into like supporting the system. He's a giver. He wants to make the world a better place. He wants to provide education. Like, he's not just in it for himself. And I was like, that's the type of people we need to work with. So someone who's willing like Vic to support, provide options, education, we're grateful that he's willing to invest some time back. So with that, Vic, I'll stop sharing my screen. You can start to share yours, and I'm eager to hear what you have to say. And with that, training, turn it over to you.
Thank you, Zach. I'm about to share my screen. Let me know if you can see it. Give me 1 second. Can you see my screen, Zach?
Looks good. You might need to share the screen. Hit the presentation mode.
Give me 1 second. It should be. Is this sharing? You can't see it on your end?
I see it like normal if you go to the bottom right. Yeah, that one. All good. It's all you.
Perfect. Okay. So give me 1 second. Let me see. Hide this. Can you still see it?
Yes, looks good.
Excellent. Okay. Well, thank you, Zach. I really appreciate it. This is exciting. First thing first, I want to thank NVSBC for allowing me the opportunity to share my insight on GovCon finance and accounting with the small business owners. I was introduced to NVSBC about 2 years ago, and since then I have met many individuals who directly served our country and now continue to support our nation indirectly through government contracting. This is my first webinar with NVSBC and hope to bring new topics in the future. I do want to disclose that I'm not providing business advice in this webinar, but rather sharing my personal insights based on my experience. Please consider my perspective as merely informative and not as a professional advice. It is always recommended to consult a qualified professional before making any business decision. With that said, Zach, I'm going to dive into the training.
All right, we're ready.
All right. Before we dive into the training, a little bit about VSingh CPA. We provide outsourced controller CFO services for government contractors. We support day-to-day operations when it comes to GovCon finance and accounting. We help establish policies and procedures, process accounts payable, submit payroll, post labor, reconcile, basically run the back office of GovCon finance and accounting. As an outsourced CFO, we work directly with your tax professionals to make sure your year-end compliance is in good hands, and also any other outside auditing authority. We do work with DCAA, helping clients with their provisional billing rates, incurred cost mission, prepare disclosure statements, post-award audit, pre-award audit, and overall DCA compliance. The agenda for today, we're going to talk about different business entities, and And then, the frequently asked questions that I have faced during my experience, what kind of entities a person should establish to get into GovCon world. And then once they have successfully established a entity, what kind of accounting system they should purchase or acquire to track their monthly expenses and assets and liabilities. And then systems do or do not. Then we'll talk about basic accounting, balance sheet, profit and loss statements, and retained earnings. Sole proprietorship is one of the basic business type, which is very inexpensive to set up. No legal distinction between the business and the owner. Limited ability to raise funds or attract investors, limited growth potential due to limited resources because there's only one owner. Personal liabilities for all debts and legal actions are tied to the owner. On the other hand, LLC, S corporation, C corporation, those offer personal liability protection. We'll talk a little bit more LLC first. LLC pass-through taxation, which means that profits and losses are reported on personal tax return. There's a flexible management structure with options for member managed or manager managed LLCs. There's no restriction on numbers of owners who are known as members, protection of personal assets from the debts and legal actions of the business, increased credibility with customers and suppliers, higher costs associated with formation of compliance requirements. I'll talk about C corporation first, and then I'll come back to S corporation. C corporation, on the other hand, is a corporation. If you ever, when you're trying to set up your business and your future plans are to grow tremendously, you want to get other investors involved into your business, you want them to come in and invest into your company, C corporation might be the right fit for you. But there's pros and cons of C corporation and LLC partnerships. C corporation, there's ability to raise funds by issuing stocks, but there's more people involved now in the business. You have the ability to go public and sell stocks on open market. It is a very complex management structure. It requires directors, officers, and annual meetings. And the biggest disadvantage of C corporation is the double taxation. You are taxed at the company profit level and the dividends that are passed down to the shareholders. Now, if again you're trying to grow your business from 1 million to 10 million, 10 million to 100 million and $1 billion, and you're trying to bring in investors, C corporation might be the right fit for you. But if you're trying to go from million to 10 million, 50 million, you want to sell your business, S corporation may be the best fit for you, right? But then again, you do want to discuss these business decisions with a qualified advisor and make the appropriate decision. My favorite is S corporation because you're paying taxes only at personal level. At the company level, there's no taxes. So you have the ability under S corporation, you have the ability to have up to 100 shareholders who are US citizens, avoid double taxation, limited ability to raise funds or to attract investors due to restrictions. But that said, you could still bring in the investors in here, which are also the shareholders, but it limits to 100. Nonprofit, we'll talk a little bit about it, but for the most part, LLC, S corporation, and C corporations are mostly preferred for GovCon, but the best one out of 3 is the S corporation. Nonprofit, again, the word speaks for itself, is for, there's no profit to individual owners or the shareholders. In this particular case, all the profit that's generated by nonprofit is put back into the business. Through my career, there's questions that come up. can you start a business without forming an LLC, corporation, or nonprofit? While it is not required to establish an entity, it's highly recommended to protect yourself from legal perspective. It is recommended that you should establish a separate entity like LLC or S corporation or C corporation. What is the main difference between sole proprietorship and LLC? A sole proprietorship does not offer personal liability protection for business debts or obligations, whereas an LLC shields owners from personal liability. What are the benefits of incorporating a business? Incorporating a business is the primary benefit is that you as an individual is separate from the entity, from the business. So incorporating a business offers asset protection, tax benefits, and credibility with customers and investors. Additionally, the corporation has perpetual existence, meaning 5 years down the road, you could sell your business, everything remains the same, and some new owners or shareholders come in and take on the business, and they continue to grow your legacy. How does an LLC differ from corporation? Both entities provide protection. LLC are generally easier to establish, but corporation may be preferred by investors. They both have their own pros and cons. Again, please discuss with your qualified advisor. Can an LLC be taxed as an S corporation? Yes. You can keep your LLC from legal perspective, and from tax perspective, have it as S corporation, which I think is one of the best entity out there that allows you to do this. So you can take the full benefit from the tax side, and you can take the full benefit from the legal perspective. Do you need a DBA name? The only time you would need a DBA name when you're utilizing a different name to market, to get from the client, to get from your employees or customers, the public. When you're using that different name from what's established with the government. Do you require a business license or permit to commence your business? I haven't seen any state or local authorities that does not require a business license. The 98% of the time, yes, you will require business license. There may be thresholds in some jurisdiction that says, hey, if you have less than 500K in gross receipts, no license is required. But I'm not aware of many of those jurisdictions. Can you change your legal structure of your business after it has been established? Yes, you can. It's preferred that it is set up correctly with your vision and mission, the way you want to set up, so you don't have to go this headache in future. But yes, it is doable. It may require some extra accounting. It may require extra legal work. So you may have to involve your lawyer and accountants to change the legal structure of your business. But yes, it is doable. Moving on to the next topic. So assuming you have your business all set up correctly, everything is going fine, then the next big challenge comes in, record keeping. And what do we need for record keeping? Is a good ERP and or accounting information system. The 3 accounting systems that I use on regular basis for my clients and for myself are Uninet, Deltek, and QuickBooks. They all work good. They're all great systems. There's pros and cons in all of them. There's advantages and disadvantages in all of them. I like all of them. They're great products out there. Accounting information systems, is a software that we need to have in place to manage your day-to-day operations, projects, finances more efficiently. This systems offer range features that can help contractors improve their project management, financial management, and compliance with government regulations. And I'll talk more in details about Uninet, Deltek, and QuickBooks. What are the pros and cons of each? Uninet, great system, project management. You can manage your projects, resource management, financial management, time tracking system. Overall, Uninet helps contractors manage their projects efficiently by providing real-time insight into project status, resources, availability, and financial performance. Unit's time and expense tracking feature makes it easy for contractors to track billable hours and expense, which is essential for government contractors. Uninet has a great tool in there that helps automate the billing. You can, collect your hours in timekeeping system, bill the client, send the bill, all through Uninet. Great system. Deltek, on the other hand, I've been using Deltek since 2006. A lot of people don't like it. A lot of people like it. I love it. That was the first ERP system I was ever introduced to. Been using it since then. It's very complex, but very, very robust system when it comes to GovCon. Deltek is designed to meet requirements of government contractors, which including DCAA, FAR, cost accounting standards, improved financial management. Deltek's financial management module will provide real-time visibility into financial performance. It helps contractors make better financial decisions. Deltek's project management module helps contractor manage projects more efficiently by providing real-time insights into project status, resource allocation, and financial performance. QuickBooks, on the other hand, many new business owners who are just getting into the business, their first go product is QuickBooks, and there's nothing wrong with that. No accounting system without appropriate policies and procedures, without the knowledgeable person who's utilizing the accounting system and the software itself makes it, without these three components and of the controls of the company, makes it complete accounting system. So QuickBooks, yes, it is an accounting system that can be used out there, but it requires a lot of customizations. It's easy to use, it's affordable, it's flexible, but does it do what Deltek does and what Uninet does? No, it doesn't. Is it customizable? Yes, it is. But the time that you're spending in customizing this online QuickBooks system, that's the time you could be using someplace else. So they can all deliver depending on where you are in your business phase. If you're 10 million in business, is QuickBooks the best product? Those are the decisions you have to make as you get into your business more and more and your revenue is growing. Accounting systems, setup do's and don'ts. Do's, select an appropriate accounting system, maybe from the beginning, or have goals for yourself. When I cross 10 million in revenue, this is the accounting system I'm going to utilize. And I'm talking about Uninet, CostPoint, and QuickBooks because these are the accounting system I have been using myself. I like those systems. I have no need to go outside of this, but there may be other accounting systems that you guys are familiar with. Whatever accounting system you guys choose, you want to make the right decisions as you're growing your business. So do select an appropriate accounting system. QuickBooks Desktop, don't. These days with technology, you want to have an accounting system that's in the cloud, not on your own premises. Or don't buy an accounting system that is expensive, right? If in the first year you're only generating 250K in revenue, but you're spending over 30K in your accounting system, as an outsourced CFO, I would say no. That's not how we do business, right? So you have to make the right business decision at the right time. Notes, watch your costs, have a budget in place before you decide to invest in any place. Do's, second row, set chart of accounts based on your business needs. I've seen clients, they get an ERP system and they continue to use a pre-configured chart of accounts. It doesn't work like that. They're pre-configured. You need to modify these chart of accounts based on your needs, right? Based on the industry standards that you're in. So GovCon, pretty standard chart of account, but you want to be able to modify those in that way. Uninet and Delta Cost Point have a pre-configured chart of accounts, which is pretty good for government contracting, but then still, again, based on your business model, you may still need to modify. 99% of the time, you will need to modify them. Track time in accounting information system. Third row I'm talking about. You do want to track time in an accounting system or ERP system. Again, depending on your company size, if you're one-man show, you're just starting, tracking in Excel may be just perfect thing for you to do, right? You have one contract, one-man show, there's not much going on. Do you even need to invest in QuickBooks? Those are the questions you have to ask. Talk to someone who is your trusted advisor and go from there. The only thing I say to my clients is, if you don't have a budget, you shouldn't be spending. Budget is no different than having a plan. If you don't have a plan, what are you executing to? Okay. So my point here is track your time in Excel if you have to, okay? But at the same time, it may not be the best option for you, depending on where you are in your business. Avoid manual errors. Excel will give you manual errors. But going back, if you're one-man show, one contract, there shouldn't be much room for manual errors because there's only one person. All right. Use payroll service provider that is integrated with your accounting information system, i.e. ADP, Paychex, or any other payroll service provider. You want to be able to take your payroll service provider, integrate them with your accounting system. Like going back to QuickBooks, QuickBooks already has a integrated payroll system in it. So for some companies, it may just work perfect, right? But let's say you're going with Uninet, ADP, you want to integrate them with your accounting system. Uninet, you want to integrate them with the payroll service provider with your system. So the reason, to avoid manual errors. Try to have one system of record. So when I say integrate them, this is what I mean. Have one system of record. Timesheet is done by the employees. There's nowhere in your process that needs to be changed, all the way through getting payroll completed, all the way through the billing. Timesheet is entered by an employee, the data should flow itself. Nowhere in the process you should have to re-enter that data again. One data point entry. Collect cost and revenue by project. Now, QuickBooks, you can do it, but it doesn't. You have to customize a lot of stuff. In Uninet and Deltek, in Deltek especially, it's called project account groups. You set up your projects, you set up your account, you set up your group, you link them all three. This way, assuming you have 3 customers under, you have 3 customers, you want to be able, and under 3 customers, you have, let's say you have 20 projects. You want to be able to tie those projects to customers and track your cost by projects. Ignore project setups. Don't ignore project setups. If you're in GovCon world, you have to set up your projects so you can track your cost accordingly. Must understand profits by project. Close your books on monthly basis dues. Don't close them quarterly. I mean, if you didn't close them monthly, then obviously close them quarterly. But it is highly recommended to monitor your books on monthly basis, especially when you're in GovCon world. Recorded data with full information. You have to have all your data entries with complete information, where it came from, who it was generated by, why was it needed. So you got to have all your questions answered, and with an appropriate ERP system, these controls are already in place. What I see with new business owners is that what they're doing is keep mixing their personal expenses with business expenses. So please keep your personal expenses separate from business. Don't mix your personal expenses with business. From IRS perspective, this is known as commingling your books, which means that it's a no-no. It's a huge no-no, as well as one of the most common ways business find themselves on the barrel end of an IRS or state audit. According to IRS, personal expenses are not business deductible. So please do not mix your personal expenses with business expenses. Separate business bank account. Definitely from day one, the day you establish a entity with any state, and as soon as you get your EIN number, and before you get your first payment from the client, before you incur a business expense, have a business account open. There's times when personal accounts are used to start a business. It's okay, but you don't want to go too far with that. What you want to do is have all your expenses, if it's paid by personal account, collect them, put them in the business, and get yourself reimbursed. Don't mix them, please. Save supporting documents online. 2023, I'm still seeing clients having hard copies of receipts. Everything should be saved in the cloud. Avoid misplacing documents. Business meals, next, use 5W rules. I've learned this about 15 years ago, right? When you're taking your clients on a business meal, or you're taking your employees to a business meal, have what discussions happened, why was it necessary, who attended it, and what is the purpose, right? So try to answer those questions, have them documented on your receipt. It becomes very helpful end of the year for your tax professional, because they need to deduct those business meals. Is it 50% deductible? Is it 100% deductible? And they can make that determination easily. Now we're moving to accounting 101, basics. Balance sheet, which is an asset equals to liability plus owner's equity. Very first time when you open up an account, your very first entry should be against your balance sheet. Why? Because you just opened up an account. Where does the entry go? You debit cash because you opened an account, and you credit investment, owner's equity, or common stock, depending on what type of business you open. Is it an LLC? Is it an S corporation? Is it a C corporation? So that should be very first entry. Then liabilities. If you got any loan, that's a liability. Owner's equity. And as you grow your business, your owner's equity continue to increase. A definition: a balance sheet is a financial statement that provides a snapshot of company's financial position at any given time. It presents a company's assets, liabilities, and equity, and shows how these elements are financed. Balance sheet is a very crucial document when it comes to bringing in investors, getting a loan, exit strategy. If you're ever thinking to sell your business, 5-year term, 7-year term, 10-year term, balance sheet becomes a very crucial part of your business. I have seen many owners ignoring the balance sheet. They don't even, some of them don't even understand what balance sheet is. And I'm not talking new business owners. I'm talking someone who's been at 10 million in revenue and now they're up to 13 million in revenue. They have no idea what these numbers are presenting. So, I really ask that new business owners that are coming in, or business owners that are already in business for many years, that they don't take their balance sheet lightly, because that is the health of the business. That tells you how healthy the business is. Investors, creditors, and other stakeholders use balance sheet to make informed decisions about investing, lending, or doing business with the company. The balance sheet can be used to identify areas where the company and can improve its financial position, such as reducing liabilities and increasing assets. Companies should prepare and disclose their balance sheets, and it can also be used to comply with loan agreements or other financial obligations. Again, a balance sheet is made of three components: assets, liabilities, and shareholders' equity. And I'll talk a little bit more on shareholders' equity a little later. To create a balance sheet, the company must list all its assets and their value, followed by its liabilities and shareholders' equity. Then obviously total asset must always equal to total liabilities and shareholders' equity. I have given a little snapshot to the left where total assets equals to total liabilities plus equity. Again, assets provide economic value to business, and it can be categorized as current assets, which is cash, receivables, and inventory, or fixed assets, which can be your laptops. I've seen companies, they're operating a good business, but they have no assets on the business. Why? Because they've purchased all these items and expensed them directly. It may be good for tax purposes, which is good, but it doesn't show your balance sheet as healthy as it should. Because you should have those assets. Like, let's say you have a business with 50 employees and there's 50 laptops. That's $50,000. I feel like that should be on your balance sheet. Liabilities are anything that will incur an expense or cost in the future and can be categorized as current liability. Accounts payable, short-term loans, non-current liabilities, long-term debt, deferred tax liability. There's another situation where I'm seeing a lot of employers have a payroll from 16th through the end of the month. And the payday is like the 5th or the 6th of the month. So as of end of the month, there should be liability on the books because it was not paid till the following month. I've seen clients, they don't have any liability on the books. It's not a problem till you actually need to go talk to the investors, talk to getting a loan, looking for exit strategy. Those numbers become really important. If somebody came and asked you how's your business doing, they will look at the balance sheet, and when these numbers are not properly recorded on your financial statements, it kind of gives the other perspective. Well, if the business owners are not understanding this part of the business, how well are they doing in the other part of the business? So it becomes really, one thing after another. And other thing is, if your balance sheet is not correct, the probability of being your profit and loss statement not being correct is very, very high. Equity, shareholders' equity, is the amount of money the owners have invested in the business and includes share capital and retained earnings. So when business is opened, the money that's invested into the business, it's your equity, obviously. But then how does the equity get built? It gets built through the profit that you're generating from the business. So, and it will continue to generate that, increase that equity unless you give yourself distribution. Continuing on. Equity being recorded for different entities. For sole proprietorship, as a sole owner of a business, you have complete equity in the business. However, your personal assets are not protected from personal liability, so your equity is at risk. LLC, equity in an LLC is typically represented by membership, units or interests, which are similar to share of a stock corporation. Members have an ownership interest in the company, but their personal assets are generally protected from the company's liability. S corporation, my favorite, are not taxed at the corporate level, so there are no shareholders in the traditional sense. Instead, shareholders receive distribution of the company's profits, which are taxed as personal income. Shareholders typically hold stock in corporation. Here, I just want to talk a little bit more on S corporation. What I've seen, actually, which applies to LLC and C corporation, what I've seen is business owners using their personal credit card, charging it to the business, and then they tell their accountants, hey, just put that as an S distribution because it's coming from the bottom line. True, very true. But when you establish the S corporation business or C corporation or LLC, anytime you make a distribution, it should be in an agreement with the entity itself. Like, so what is your agreement telling you how you should distribute the money? If you're not complying with those agreements, then you're not following the best business practices. I had to go back to this one just because I remembered. So anyways, S corporation are not taxed at the corporate level. So there are no shareholders in a traditional sense. And instead, shareholders receive distribution of the company's profit, which are taxed at the personal income. Shareholder typically holds stock in the corporation. C corporation issues stocks, which represents ownership in the company. Shareholder has the right to vote on important company decisions and receive dividend when the company is profitable. Nonprofit, again, are not owned by an individual or shareholders. So there's no equity in the traditional sense. Instead, nonprofit have members who may have voting rights and some control over the organization directions. Any profit generated by the nonprofit is reinvested into the business. Profit and loss. If anything, business owners are always watching this, which is good, right? Profit equals revenue minus cost. A profit and loss statement, also known as an income statement, is a financial report that shows a company revenue, expenses, and net income over a specified period, usually 1 year or 1 quarter. In GovCon world, monthly. And depending on your company size, maybe quarterly, but highly recommended monthly. The P&L statement allows business owners to measure their profitability by comparing revenue to expenses. A business owner can determine whether their business is profitable or not. The P&L statement breaks down the revenue, cost, and expenses into a category which provides insight into how business is operating. Business owners can use this information to identify areas where they can cut costs, improve efficiency, or increase revenue. The P&L statement is an important tool for financial planning. By reviewing the P&L statement regularly, business owners can make informed business decisions. On the next slide, I'm going to show an example and kind of dig into details over here of the profit and loss statement. On the right side, I have a breakdown of revenue, expenses, and net income. Gross profit, total expenses, EBITDA, and then operating income and earnings before tax, and then finally net income. So talking about revenue, now I'm going to try to relate this structure right here back into the ERP system. So revenue, the section shows the total amount of revenue the company generated during a period. It includes sales of product or service, as well as any other income of the company earned. So revenue in a GovCon world is collected by customer, by project. A customer could have multiple projects. So you want to be able to collect revenue by total by customer, but total by project, so you can actually see how much profit are you making per project, especially if it's a cost plus project. Okay. What I've seen happening is that revenue, especially in QuickBooks, revenue is being collected all at one or account level. There's no project tied to it, and there is no org tied to it. So what state it was generated in, what customer was generated in, all that is just ignored. And that's a no-no in GovCon world. Where revenue is generated, who is it generated by, and what project. These components become all very important when it comes to GovCon, especially in tax reporting too, because when you're filing your taxes end of the year, your tax professional is going to ask you, can you provide me revenue by state? Because they're required to report revenue by state. And most of the time we find that the client they're not aware, nobody told them, and they're just collecting revenue based on the customer they have set up in QuickBooks, and it's tying to the chart of accounts, and they get one line. Or some cases I've seen clients collecting revenue by account. So account one is client A, account two revenue account is client B, and that is not it's doable, but that's not an appropriate accounting structure in the GovCon world, at least from my experience. Moving on to cost of goods sold. Again, because you're breaking revenue by project, by customer, by location, you also want to collect your cost of goods sold, by project, by customer, and by location. Okay, so you can match revenue equals to expense principle, right? So you take your cost, you tie to your revenue, so you actually have the clear picture of where you're generating your gross profit from. What is gross profit? Gross profit is purely your revenue. Your cost that's directly tied to that revenue gives you gross profit. Now you get into operating expenses, your utilities, your rent, your G&A labor, your overhead labor, all that. Those are your operating expenses. Those expenses will remain there even though your direct cost is being eliminated, right, for the most part. So those are your operating expenses. Then you finally get into an operating income, net income before taxes, and net income after taxes. Finally, retained earnings. Retained earnings refer to the portion of the company's net income or profit that is kept by the company rather than distributing to its shareholders. Retained earnings are typically reinvested into the company for various purposes, such as funding future growth, paying off debt, or reinvesting or investing into new opportunities. Financial flexibility. How does retained earning help you? It gives you financial flexibility. Retained earnings allows companies to reinvest profits into business, which can be used for growth and improvements. You don't have to dig into your line of credit. You may have line of credit, but you have so much money in the bank that you don't have to worry about line of credit. No debt or dilution. Retained earnings are equity financing, so there's no debt to repay or ownership dilution. Companies with the strong retained earnings are viewed as more credit worthy by lenders and investors. Increased dividends. Companies can distribute some retained earnings as dividend to attract and retain investors. Buffer against economic downturns. Retained earnings act as a reserve of capital that can cover costs without taking on additional debt or diluting ownership. Again, this is all I had for you guys. Hopefully this was informative, and if you have any questions, please, you have my email, please feel free to send them on my way.
All right, Vic, thanks for doing that. I know, by yourself without like the interaction, sometimes you just get lost, but I think it went really well. As we were discussing before this started, we did have some questions from some of the folks who registered ahead of time, and I'd like to get into some of those before we kind of wrap up and just say goodbye, and before we post this to YouTube. So the first one has to do with Defense Contract Audit Agency, DCAA. The question was, are there exemptions to DCAA compliance for small businesses? So that's the first part of like several questions from Keith here. So are there exemptions to DCAA compliance for small business?
Yes and no. My first recommendation would be going through the contract itself, the contract that was awarded to the client. There most likely are FAR clauses, which clearly defines what requirements does the contractor have. Does the contractor have requirement to report to DCAA? First of all, if it is most likely if it's not DoD contract, the probability is that there's no requirement. But then again, other agencies may ask the contractor to report to DCA. But if the but most likely review the contract, see what FAR clauses they have, and then obviously there's thresholds too. Like for example, if the contract is less than 250K, there may not be any reporting requirements. But don't hold me hostage on that. Please read the contract itself. There's most likely going to be guidance on what requirement does the contractor have.
Perfect. Okay, some further elements, like clearly Keith here is exploring some of around DCA and QuickBooks and all of GovCon, but his next question is, if set up and hosted properly, can QuickBooks Pro be used for a DCA compliance system?
Yeah, of course. I mean, you could have the most robust accounting system out there, but if the people utilizing it have lack of knowledge, the controls, the accounting policies and procedures that are not being followed, even the most expensive system is not an acceptable accounting system. Whereas QuickBooks come in and it's customized properly. The people involved are following the internal controls properly, and the policies and procedures that are established are being followed properly, then yes, of course, the QuickBooks can be a great system.
All right, fantastic. Okay, this one, I think you had elements of it in your training, but just to further solidify your position and your opinion on this, but is it more expensive and cumbersome to run an ERP system for a GovCon, for a government contractor?
So when is it more expensive? Well, define expensive, right? I
Right.
mean, right? If your profit margins are high enough, and you're investing so much time customizing QuickBooks, and your profit can support to have an ERP system where you have less worries about internal controls. Remember, Uninet and CostPoint, they have great systems and controls in place already that QuickBook user don't have to worry about. They don't have to worry about customizing them, right? On top of it, so that's one part. On top of it, these expensive ERP systems are delivering these reports that are going to help the company make better decisions on their business. So end of the day, you get what you pay for.
Yeah.
So,
Okay. Last question from Keith is, talking about accounting and bookkeeping, like where do you find qualified bookkeepers for newer GovCons?
where do you find qualified bookkeepers? Google. I have my email, VSingh. Call me. But overall, they're all over the place. He can email me, and I can talk to him and guide him the right direction depending on what his needs are.
Yeah.
Because I feel like bookkeeper is such a general term.
Right.
What exactly is he trying to establish, right?
That's a great follow-up. I appreciate that because, what fits one may not fit the other, and understanding exactly what you're trying to accomplish with a bookkeeper, no matter what stage you're at. So, okay, next set of questions. Question specifically says, who is responsible to collect, report, and deposit Department of Revenue sales tax? So when you sell to the federal government, like, are those taxable transactions?
Who's responsible for collecting and reporting tax? The taxpayer. End of the day, it's the taxpayer. It's the taxpayer's responsibility. So the business, the owner is responsible, right? But as far as the states the client is dealing with, I've seen situations where a client is buying a product from one state and selling into a different state, and they're selling to the government. Obviously, sometimes government has no the sales exemption, authorization, which the client should get it from the government and show that to the state, saying, hey, as a vendor, because I'm buying this product for the end user, which is the government, I do not have to pay tax. But they need to show that certificate along with, they probably need to fill some forms with the state and tell them, hey, we're exempt from paying these taxes. Hopefully I answered that question.
Yeah, and I think they can follow up with you if there's further specifics. Okay, I know there have been several questions about QuickBooks. I think you actually addressed many of those. The last question from one of our member organizations said, when should you increase your level of financial preparation with your CPA?
The day you start your business. I feel like, when should you deal with level of preparation? Well, it's a very vague question. But as far as your level of financial preparation, I feel like there shouldn't be a difference between the level of financial preparation at $500 million or $10 million company. End of the day, there's different requirements by different agencies also, right? Level of preparation it's not just from bookkeeping perspective, right? Because end of the day, you got to, file your taxes, you generate 100K revenue or 250, 500. You got to file your taxes with appropriate financial data.
I appreciate that. So
yeah, hopefully this helps.
Yeah, and again, like I think there's, at least with you, like there are other, service providers out there. Part of the reason we have you up here, people can come see you at our DC dinners. You're a frequent guest. I know you bring your staff. But with that, I just want to say, Vic, on behalf of the board of directors, our staff, members of the coalition, just want to share our appreciation for you making time to share your opinions, what you've learned, and hopefully getting some of those newer GovCons and even some of the mature GovCons, like, some of this data can, always go back and refresh. And, they're training their staffs on like P&L and how that can help them make better decisions, not just the business owners, like as people continue to grow. So thank you, Vic. And with that, I do want to thank our sponsors, BAE Systems, as well as Bank of America, for their investment. For everyone watching, if you have any questions, clearly Vic has his email up on the screen. You can also send an email to contact@nvsbc.org. And we want you to come participate in our events. I think Vic is, like I said, he's a regular at some of our DC networking dinners. And he's even come out, he said, staff come to our Huntsville networking dinners as well. So, he's there to answer your questions. He wants you guys to succeed. So, with that, I just want to say thank you, everyone. And we'll see you next time. Take care.
Thank you. Bye-bye.